Hey guys, welcome back to another episode of Talking Money with Pete. In these videos, I try and explain some general financial concepts, and I use a lot of pictures and analogies and sometimes props to help go through and explain those concepts. So today, we've been asked a lot recently by first home buyers, what do the banks look at when they're going for a loan and what things should I focus on? So that's what we're going to be going through and talking about today. So let's go through and get stuck here. So today we're going to be going through and talking about if you're a first home buyer or even someone that's went through and got a loan before and not really realised the process or wants to brush up on it a little bit, what things do the banks actually look at when you're going through and getting a loan, and what can you do to improve your situation to possibly get a larger loan if you're looking for it? So there's three main categories that banks look at when they're going for loans. And so normally I do a little bit of role play when I'm sitting across the table with people to make them go through and guess. So we'll do a similar sort of thing today, where I go through, once we've talked about assets, liabilities, and they may have their deposit saved up of, say, whatever it is, $5,000 or something like that, and I go, okay, well, the reason I got you here is because I want a loan of $5,000 from you. So picture something, some amount of money that you've got saved, because then it's good in your head to go through and say, okay, well, I really want to know what this guy wants from me, so it'll make you go through and ask the sort of questions about it. So once I've went through and established that and done that with them, then, so think of that through the video for now, then I say, okay, so I want that from you. There's three main categories you want to know about me before you'll lend me money. So I give them a chance to ask some questions before they give me the money. And so normally they'll come up pretty quickly with, do you have a job? How much do you earn? What other debts do you have? And all those sorts of things come down to the first category, which is serviceability. So that comes into, do you have enough money to pay me back this money that I'm about to lend you? Do you have enough to pay for the loan? That's a really big part in a lot of lending processes. And so that's one that they get pretty quickly. The next one that we go through and do is that eventually come in, what kind of deposit do I have? Do I have something, am I going to put some of my own skin in the game? What can they do if I don't pay it back? Do I have any skin in it that they can go through and take? They're the two that normally, and we'll expand on them in a little bit, that people normally get. The third one stumps a fair few people, and a lot of the time it's not particularly an issue, but if I go through and I trick a bit and I say, okay, so you don't want to know anything else, you're happy with just those two, you're going to lend me the money? And they'll go, yes, we'll lend you the money. They go, great, I've got a really good feeling at the poker game tonight, so I can definitely pay you back, and I've put some skin in the game myself. And they go, okay, yeah, so I need to know what you're going through and spending it on. So if you're looking to buy a house and you're going to buy 500 acres in the middle of Longreach, it's a little bit different than buying a house somewhere in Sydney or Southeast Queensland or something like that. So that makes a bit of a difference. But depending on what you're buying, that one is generally pretty easily ticked off if you're in a metropolitan area. And so not all banks will go out and do acres upon acres in Longreach and those sorts of things, but if you're going to buy a pretty standard house or unit, that one's not too much of an issue. So the next two are the ones that are the predominant ones that we'll be going through and talking about today. And so once we know what you're buying, then it's a case of, okay, which of these two which one are you weakest on? So once you know you get an answer back, if the bank will lend you some amount of money, then it's a case of which do you need to work on the most to get lent more money. So if you've got, I'll give you the extreme analogies. If you go, well, some people come to us and they both earn 100 grand, they say, look, we both earn 200 grand, great, you tick that box really well, but you don't have any savings. Or you might be the opposite, you might be a retiree and you've got 200 grand and you want to purchase a $300,000 house, but you have no way of earning an income, and so the bank won't go through and you've got no way to pay back the other 100,000. So you can't just be really strong in one or really strong in the other. It's good to go through and have a bit of a blend. Now this is really important to go through and understand, because when people come to us and they say, look, what should I be doing? I've got a bit of a car loan left and we've got this money here. Should we be putting it into savings or should we be paying off the car loan? And they will have got advice from friends, and someone says, well, you should really be doing this or you should be doing that. And you really shouldn't be listening to anyone. You should go speak to a mortgage broker or a professional in that area that can tell you what the banks are actually looking at, or the bank themselves. And so it's a case of going through, and if you have a really strong deposit anyway, you've got over the 20% that the bank particularly wants, or you might have enough, you might have the 10% that the bank wants, and you're happy to go through and pay some lender's mortgage insurance, LMI, and we'll get to that a little bit later too, then it may be the case of going through and putting a little bit of that to paying off debts to improve your servicing. Or you might be flying through and servicing, you both earn 300 grand a year, and so you really need to go through and just increase that deposit. So understanding the underlying mechanics behind them both can help you very clearly articulate and decide whether you should pay off debt and to improve your servicing, or accumulate savings. And so they're the three big ones there. And so knowing which one you're weakest on can go through and help you improve to how much you can borrow. The other part there is just because you can doesn't mean you should. Sometimes borrowing more and more money from the bank to buy a bigger and bigger house isn't always necessarily the best idea too. That's also a bit of a story for another day as well. So I said I'll touch on lender's mortgage insurance, probably another video all in itself. It stands for lender's mortgage insurance, or LMI for short, is basically like an insurance policy that you pay. So you pay the policy, and if the policy pays out, it pays out to the bank, not to you. So you take out a policy for someone else. And what that is when you're going through and you're getting a loan, banks start to feel a little bit uncomfortable when they're going under 20%. So what I mean by that is if they're going to lend you, if you're looking for a $500,000 house, just to keep my maths real simple, 20% of that is 100 grand. If you have less than $100,000 deposit, the bank goes, oh, you don't have as much skin in the game, so they're going to go through and take out an insurance policy, and it gets more expensive the less money you have as a percentage, depending on what you're buying. And so sometimes people go, well, $100,000 is a lot to go through and save. By the time I've saved up the $100,000, then the house will be worth 600, and I'll need 120. And so it's growing quicker than I can get away. So sometimes it's worth paying lenders in mortgage insurance, sometimes it's not. But I hope you guys learned something today. And hi guys, I hope you found that video interesting, and feel free to leave a like or a comment in the section below. We've got an amazing lending team with some mortgage brokers in there that can go through and help you figure out what you should focus on, or whether or not the bank will lend you money for a loan. Once again, the number will be below and the email address below as well. So I hope we were able to help you, and look forward to seeing you in future videos.